Welcome to the podcast, ES Midweek Update, your Wednesday appointment for cyclical and volume analysis on ES, the S&P 500 mini futures contract. I am Ryan Cooper, a financial journalist, and we are joined by expert analyst and trader Clara Bennett from Cyclical. Please note that the views presented in this podcast are generated by AI NotebookLM, that analyses and reprocesses are pre-market live sessions from the YouTube channel Cyclical, and therefore could contain errors. All references to price levels or market analysis are not to be considered financial advice. The aim of this podcast is to analyze market dynamics and provide a midweek update.
Ever feel like the market's playing a game of, guess what happens next? Well, today we're bringing in the cheat codes. Cyclical analysis.
Ooh, I like that.
We're diving deep into the ES, the S&P 500 mini futures.
Right.
See if we can decode its rhythm.
Yeah.
And joining us, we've got Clara Bennett, founder of Cyclical.
Hi.
Now, you live and breathe this stuff, right?
I do. I love it.
So we've got 3 pre-market sessions worth of data.
Okay.
We're going from those big quarterly cycles all the way down to the 4-day.
Right.
Plus volume profiles and even depth of market.
Gom.
The DOM, for all you pros out there.
Yeah.
Ready to see if we can outsmart the market this week?
Let's do it.
Okay.
I love that. Cheat codes for the market.
Yeah?
Yeah. I like to think of it as finding the patterns that repeat.
Uh-huh.
You know, those market whispers that tell us what's coming next.
All right, Clara, first things first.
Okay.
Paint the big picture for us. What's the overall market mood right now?
Mm-hmm.
Bullish? Bearish? Sitting on the fence?
It's interesting, actually.
Yeah?
Recent action makes me think we might be at the tail end of a bigger cycle.
Okay.
Maybe even the yearly or the 2-year cycle. We saw the ES break through that monthly support level,
Right.
the MEN 5.
Yeah.
At the end of last month. And the volume during that break, huge.
Okay, stop right there. That's the kind of detail I love.
Yeah.
So for those of us who don't stare at charts all day, what does that break actually tell us? Like cyclical analysis 101 here.
Right, yeah.
Yeah.
It signals a shift. But here's the thing. We haven't hit the expected target yet. It's like the market is winding up for a punch.
Yeah.
But it hasn't thrown it yet.
Okay.
And there's this interplay between the quarterly, the half-yearly, and the yearly cycles.
Right.
It could be the quarterly wrapping up, which would set us up for a steeper drop.
Okay, so not a guarantee of a crash.
Right.
But the potential's there.
Exactly.
Okay. Now, you also track that 4-day cycle.
I do.
How's that fitting into all this?
Yeah. So think of it like this. The 4-day cycle has 4 8-day cycles within it.
Okay.
And right now we're in what looks like a buy phase.
Uh-huh.
Which should run for the next 2 trading days.
So green lights all around, right? Buy, buy, buy.
Not so fast.
Oh, okay.
The market loves to keep us guessing.
Yeah.
So we could see sideways action, even a reversal before the 4-day cycle finishes its course.
Okay.
So yeah, don't mistake this for a crystal ball. It's more like a roadmap with some potential detours.
Speaking of roadmaps, you're big on volume profiles.
I am.
So walk us through how you use those to either confirm or maybe throw shade on your cyclical analysis.
Sure. Well, volume is where the rubber meets the road, right?
Right.
I focus on the value area high, the VAH,
VH.
and the value area low, or VAL.
Gotcha.
And those are your price ranges where the auction happened.
Yeah.
And when price busts through these with real oomph on volume,
Right.
that's a big signal.
Love good oomph example.
Right.
So give us one from recent action.
Okay. So Monday's a perfect case. The ES poked its head above the VAH, but then closed with a ton of volume under the VL, bearish signal flashing.
Okay.
It was like the market was testing the waters for a rally and then said, nope, not today.
All right, so let's take this down another level.
Oh.
Depth of market time.
DOM.
DOM, yeah. Now, you are a DOM devotee.
Yeah.
What secrets does it reveal that most folks miss?
So the DOM is like X-ray vision for traders.
Okay.
You actually see those orders lined up. You see the buyers and sellers at each price.
Right.
And so it's not just about the price, it's about the intention behind it.
Give us some concrete examples. What key levels have you spotted lately?
There were some really fascinating areas around 58.70 and 58.65.
Okay.
And we saw aggressive buying get eaten up by sellers there.
Yeah.
Which is what drove that price action down.
So not just random numbers. These become your targets.
Exactly. Potential short entries.
Right.
And those levels where the buying got slammed, those are where I'd put my stop loss orders to keep the risk in check.
Now, Monday's price action.
Yeah.
Break that down for us.
Okay.
What happened? What signals did it give us?
Here's what stands out. The ES didn't hit its expected target of 6025. Now, in cyclical analysis, those targets often line up with cycle turning points.
Right.
So this miss is a yellow flag.
Okay.
And remember that close below the VAL on Monday, that left gaps in the volume profile. Another bearish hint. It's like the market was setting a trap for overly enthusiastic bulls.
I'm getting a proceed with caution vibe here.
Right.
Now, what about Tuesday's session?
Okay.
Any short entry signals popping up?
Yeah, keep your eye on 5930.
Okay.
There was a whole pile of buy orders there that got swallowed up, leading to a break lower. So that level's now resistance. Bears might be licking their chops.
So we've got some bearish signals flashing. But let's play devil's advocate for a sec.
Yeah.
What would need to happen for you to, like, flip the script and go bullish?
Show me a break above key resistance. And I mean a real breakout, not just a little blip.
Right.
And of course, volume needs to be there, cheering on the move. Until then, I'm sticking with the bears.
All right, so we're setting up our watch list.
Okay.
5930 is on it. But with all this potential for volatility, how do you personally manage risk? Especially in a market as, wild as the ES.
It's constant vigilance.
Yeah.
This isn't a set it and forget it game. You have to adapt as the market throws curveballs. I'm a big fan of intraday trading, especially when these major cyclical shifts are brewing. Close out positions before the day ends. Avoid those nasty overnight surprises.
So it's like taking stock every day, resetting, and then deciding your next move.
Exactly. Preserve capital. Wait for those high probability setups. Don't force it when the market's whispering, danger. Yeah, it's a thought, isn't it? That, this little shift could be part of a much bigger picture.
Right.
Like the market's about to rewrite the whole script.
Okay, so we're playing market detective here.
Right.
What clues should we be looking for? What would point to this being more than just a minor correction?
Well, first, keep an eye on those larger cycles we talked about.
Right.
The yearly or 2 yearly ones.
Yeah.
If they start rolling over, confirming a downtrend, that's a red flag.
Okay.
It's like watching this giant ship slowly start to change course.
So slow and steady, but with massive implications. What else should we be looking at?
Leading indicators.
Okay.
Those are those economic and financial data points, right, that kind of give us a hint as to where the broader economy is heading.
Right.
So if those start to weaken, it could be a sign that a recession is lurking, which usually means a bear market for stocks.
It's like looking for cracks in the foundation.
Yeah.
Those subtle signs that trouble's brewing.
Exactly.
Anything else?
Don't forget about sentiment indicators.
Right.
Those measure the mood of investors and traders.
Right.
So if sentiment takes a nosedive, like right into bearish territory, could mean the market's losing steam and that correction is coming.
So it's like feeling the temperature of the room change.
Yeah.
Sensing that collective mood shift.
Exactly.
But I guess the million-dollar question is, can we actually predict these major turns, or are we just trying to, improve our odds a little bit?
Predicting with absolute certainty. It's a fool's game.
Right.
The market's too complex. It's too unpredictable for that.
Right.
But by paying attention to these clues, we can at least increase our chances of being on the right side of the trade.
Right.
It's about gathering evidence, building a case, and making the most informed decision possible.
Love that analogy, Ani. The market is a mystery to be solved.
Right.
Speaking of mysteries, let's go back to that missed target on Monday. The ES failing to reach 6025.
Right.
Why is that potentially such a big deal in the grand scheme of things?
Well, remember, in cyclical analysis, those targets often line up with potential turning points in the cycle.
Yeah.
So missing a target like that could mean that the upward momentum we were expecting is kind of fizzling out.
Okay.
It's like the market's climbing a mountain and suddenly hits a wall.
So a sudden loss of steam.
Right.
And when we combine that with the other bearish signals we've been discussing, it really does start to feel like the market's telling a different story.
Exactly.
Than we initially thought.
It's all about connecting the dots, building a narrative based on the evidence, and sometimes that narrative changes as we get more information.
Now let's bring in the 4-day cycle. You mentioned that based on where we are, we're potentially in a buy phase.
Right.
Can you break that down for us?
Okay.
What does that mean for traders in the short term?
So the 4-day cycle is like a mini cycle, right? Within the larger market cycle. Think of it as a wave riding on top of a bigger wave.
Right.
Being in a buy phase suggests that, we might see some upward momentum over the next couple of trading days.
So like a mini bull market within the larger market size.
Exactly.
Yeah.
But remember, cycles don't always follow a perfect script.
Right.
We could see some, choppy price action.
Okay.
Maybe even a small pullback before the upward move really takes hold.
So it's not a guarantee of a smooth ride-up.
No.
But more of a probabilistic outlook.
Precisely.
Okay.
And as always, it's important to wait for confirmation from other signals before, jumping into a trade. Don't jump the gun just because one indicator is flashing green.
Now, I'm curious, how do you personally use the 4-day cycle in your trading strategy? Is it your main timing tool, or is it more of a supporting player?
I see it more as a filter for my trades. So, for example, if I'm looking at a potential long entry, I'll check if the 4-day cycle is in a buy phase. If it is, that, adds to my confidence.
Right.
But if I'm thinking about a short entry and the 4-day cycle is in a sell phase, I'm going to be extra cautious.
So it's like a sanity check, making sure that the short-term momentum is aligned with your overall trade direction.
Yeah, exactly.
Okay.
Stacking the odds in your favor.
All right, let's revisit volume analysis.
Okay.
You mentioned that the ES closed with a lot of volume below the VAL on Monday.
I did.
Can you remind us what that indicates and how traders can, use that information?
Sure. So remember, the VAL is that price range where most of the trading happened, during that session. So closing below it with strong volume suggests that sellers were really in control, pushing the price down.
Yeah.
It's like the market giving a thumbs down to the bulls.
Right.
And this could be a sign that more downside is coming, especially if we're seeing other bearish signals confirming it.
Okay, so something to pay attention to.
Yeah.
A potential red flag.
It is.
Now, let's dive a bit deeper into depth of market data, or DOM data.
Okay.
So for those who might be new to this, can you explain what the DOM is and how traders can use it to see things that they might miss, with more traditional charting techniques?
Sure. So the DOM is like this real-time X-ray of the market.
Okay.
It shows you those buy and sell orders lined up at each price, giving you a glimpse into the forces of supply and demand that are actually driving the market.
So it's like seeing the market's inner workings.
Exactly.
Gears are turning beneath the surface.
And by analyzing the DOM, you can often anticipate those price moves before they actually happen.
Okay.
So for example, if you see like a huge wall of sell orders at a certain price level, it suggests strong resistance there. So the price might have a really hard time breaking through.
Like seeing a roadblock up ahead.
Exactly. And, conversely, if you see a big cluster of buy orders, it suggests strong support, and the price might bounce off that level.
So the DOM can help traders identify those key levels of support and resistance that might not be obvious, just by looking at a chart.
Absolutely. It's like having this extra layer of insight.
Okay.
A way to see the market's thoughts before it acts.
Now, I know mastering the DOM takes time and practice, but for those who are, just starting to explore it, what advice would you give them? Where should they begin?
Start simple.
Okay.
Just watch the order flow. Pay attention to the size and the aggressiveness of those orders being placed. Look for those levels where there's like a big difference between the buy and sell orders.
Yeah.
Those are the levels where the price is most likely to react.
So it's like learning to read the footprints in the sand, right?
Yeah.
Looking for those clues.
Exactly. Each order leaves a mark. And by learning to, interpret those marks, you can start to understand the market's dynamics, on a much deeper level.
Now, let's bring in a specific example from the pre-market data we've been analyzing. You mentioned that you observed a potential short setup developing near the end of Tuesday's pre-market session.
Right.
Can you walk us through what you saw in the DOM that led you to that conclusion?
Sure. So in Tuesday's pre-market, I noticed a pattern of, aggressive buying getting absorbed by sellers around that 5,930 level.
Okay.
So every time buyers tried to push the price higher, sellers would come in with bigger orders, pushing it back down. This told me, that the sellers were in control and, that potential short setup was developing.
So like a tug of war and the sellers were winning.
Exactly. And the DOM allowed me to see that battle unfold, in real time.
Right.
So it gave me like a heads up about that potential trading opportunity.
So the DOM can be a really powerful tool for anticipating market moves.
It can be.
It's like having X-ray vision. into the market's intentions. But it's important to remember that it's just one piece of the puzzle.
Absolutely. It's most effective when you combine it with other technical and cyclical analysis techniques. It's all about layering those different perspectives to get a more complete view of the market.
Right. It's all about putting the pieces together.
Yeah.
Now, as we start to wrap up this deep dive into the ES market, can you give us like 3 key takeaways that traders should keep in mind as they navigate the coming days?
Absolutely. So first, keep in mind that, we might be in this transition period, right, for those larger market cycles.
Yeah.
So volatility could stay elevated.
Right.
So be ready to adapt and adjust your strategy as needed.
So flexibility is key.
Yeah.
What else?
Pay close attention to those key support and resistance levels that we've been talking about.
Right.
Those levels act like magnets for the price.
Yeah.
And breaks above or below those levels can signal like major changes in momentum.
Those are our guideposts.
Exactly. And finally, don't forget about volume. Volume is the fuel that drives price movements. And it can tell you a lot about the strength or weakness of a trend.
Volume is our confirmation.
Exactly. By paying attention to volume, we can avoid, being fooled by false breakouts or breakdowns.
Clara, this has been an incredibly insightful conversation.
Thanks.
Thank you so much for sharing your expertise with us today.
It's been my pleasure.
Always happy to talk about the markets.
Yeah, me too.
And to our listeners, I want to leave you with a final thought-provoking question.
Okay.
What if this potential cyclical shift is just the beginning of something much bigger? What if it's the start of, a major turning point in the financial markets?
Yeah.
It's something to ponder, as we head into the weekend.
For sure.
Until next time, happy trading.
It really is a question worth considering,
Right.
Markets are constantly evolving. And what seems like just a small blip today could be like this major trend shift tomorrow.
So let's say this is more than a minor correction.
Okay.
If we're headed for a bigger shift, how can traders prepare? What should they be looking for?
First, watch those, larger cycles we talked about, the yearly, 2-yearly ones. If those start rolling over and confirming a downtrend, that's a big warning sign.
It's like watching the tide turn.
Yeah.
Those subtle shifts.
Exactly.
That signal a bigger change is coming.
Another clue is those leading indicators.
Okay.
Those economic and financial data points that tend to foreshadow changes in the broader economy.
Right.
So if those start to weaken, it could be a sign that a recession is on the horizon, which usually means a bear market for stocks.
So it's like looking for those early cracks in the foundation.
Yeah.
Little hints that trouble's brewing beneath the surface.
Precisely.
And of course, we always got to talk about sentiment indicators. Those gauges that measure the mood of investors and traders.
Yeah.
So if that sentiment turns, decidedly bearish, could be a sign that the market's losing steam and a correction is coming.
Exactly.
It's like feeling the energy in the room change, sensing that collective mood shift. But I guess that the big question is, can we actually predict these major market turns with any certainty?
Yeah, predicting market turns with absolute certainty is like trying to predict the weather, months in advance.
Why?
It's impossible.
Yeah.
There are just too many variables at play.
Right.
But by paying attention to these clues, by gathering the evidence, piecing together the puzzle, we can at least increase our chances of being on the right side of the trade.
I like that. The market is a puzzle and we're the detectives.
Right.
Trying to solve it. Speaking of solving puzzles.
Yeah.
Let's go back to that missed target on Monday.
Okay.
The ES failing to reach 6025.
Yep. Right.
So in the context of, this larger cycle discussion, why is that missed target potentially so significant?
So remember, those targets in cyclical analysis often correspond to points where cycles are expected to turn.
Yeah.
So missing a target like that could suggest that the upward momentum that we were anticipating is weakening.
Okay.
It's like the market's trying to climb a hill, and it just couldn't quite make it to the top.
Like it ran out of steam, hit a wall, it couldn't break through.
Exactly.
Yeah.
And when we consider, this missed target, along with all those other bearish signals we've discussed, it just starts to paint this, more cautious picture.
So it's all about connecting the dots, seeing how all these pieces of information fit together.
Precisely.
Right.
Trading is like storytelling. We're trying to understand the market story, anticipate that next chapter,
Right.
and make sure we're not, left holding the wrong script when the plot twists.
Love that analogy.
Yeah.
Now, let's bring back that 4-day cycle.
Okay.
So you mentioned that based on where we are in the current cycle, we seem to be in a buy phase.
We are.
So can you remind us what that means and what should traders be watching for as this cycle plays out?
Okay, so the 4-day cycle is a shorter term cycle that can, influence price action within those larger cycles we've been talking about. Think of it as a wave riding on top of a bigger wave.
Right.
When we're in a buy phase of the 4-day cycle, it suggests that the odds favor, upward momentum over the next couple of trading days.
So it's like a mini bull market within the larger market context.
Exactly. But it's important to remember that cycles don't always, unfold in a perfectly predictable way.
Right.
So we could see some sideways price action.
Okay.
Even like a minor pullback before the upward move really gains traction.
So it's not a guarantee of straight shot up.
No.
But more of a probabilistic outlook based on the cyclical patterns.
Precisely. And as always, it's crucial to wait for confirmation, from other signals.
Right.
Before jumping into a trade. You don't want to rely just on one indicator in isolation.
Now, I'm curious, how do you personally integrate the 4-day cycle into your trading strategy?
Okay.
Do you use it as your primary timing tool or as more of a supplementary indicator?
So I use it mainly as a filter, for my trades.
Okay.
So for instance, if I'm considering a long entry, I'll check to see if the 4-day cycle is in a buy phase.
Right.
If it is, that just, adds to my confidence in the setup.
Okay.
But conversely, if I'm looking at, a potential short entry and the 4-day cycle is in a sell phase,
right,
I'd be much more cautious.
So it's like a final checkpoint.
Yeah.
Making sure that short-term momentum aligns with your overall trade direction.
Exactly. It's about stacking the odds in your favor.
Right.
Making sure the stars are aligned, so to speak.
Yeah. Let's jump back to volume analysis for a moment. You mentioned the ES closed with a lot of volume below the VAL on Monday.
Right.
So can you remind us what that indicates and how traders can use that information?
Okay, so remember the VAL is that price range where, most of the trading volume occurred.
Yeah.
So closing below it with, strong volume suggests that sellers were in control, pushing the price down.
Right.
It's like the market's giving a thumbs down to the bulls.
And this could be a sign that more downside is coming, especially if we're seeing those other bearish signals.
Exactly.
Okay, so definitely something to watch out for, a potential red flag.
It is.
Now, let's talk about depth of market data, or DOM data.
Okay.
For those who might be new to this, can you explain what the DOM is and how traders can use it to gain insights?
Sure. So the DOM is basically a real-time window into the order book.
Okay.
So it shows you the buy and sell orders, lined up at each price.
Right.
It gives you this glimpse into the forces of supply and demand that are driving the market.
So it's like seeing the market's inner workings.
Exactly.
The machinery behind those price movements.
And by analyzing the DOM, you can often anticipate price moves before they happen.
Okay.
So for example, if you see a large cluster of, sell orders at a certain price, it suggests strong resistance there, so the price might struggle to break through.
It's like seeing a roadblock.
Exactly.
Yeah.
Conversely, if you see, a large cluster of buy orders,
right,
it suggests strong support. And the price might, bounce off that level.
So the DOM can help traders, identify those key support and resistance levels that might not be obvious.
Absolutely.
Just from looking at, a traditional chart.
Yeah, it's like having this extra layer of insight.
Okay.
A way to see the market's thoughts before it acts.
Now, I know mastering the DOM takes, time and practice.
It does.
But for traders who are just starting to explore it, where should they begin? What advice would you give?
Start by, just observing the order flow.
Okay.
Pay attention to the size and aggressiveness of, the orders being placed. Look for those levels where there's a significant imbalance between, the buy and sell orders.
Right.
Those are often the levels where the price is likely to react.
It's like learning to read the footprints in the sand.
Yeah.
Looking for those clues.
Exactly.
Yeah.
Each order leaves a mark.
Right.
And by learning to interpret, those marks, you can gain this like deeper understanding of the market's dynamics.
Now let's bring in a specific example from, the pre-market data we've been analyzing.
Okay.
You mentioned you observed a potential short setup developing near the end of Tuesday's pre-market session.
Yeah.
Can you walk us through what you saw?
Sure. So near the end of Tuesday's pre-market session, I noticed this pattern of like aggressive buying orders being absorbed by sellers around that key level, 5,930.
Right.
So each time buyers tried to push the price higher, sellers would step in with these like larger orders, pushing it back down. And this told me that the sellers were in control and that, that potential short setup was developing.
So it's like watching this battle between buyers and sellers, and the sellers were winning.
Exactly. And the DOM allowed me to see that battle unfold in real time. It gave me this heads up about the potential trading opportunity.
So the DOM can be a powerful tool for anticipating market moves. It's like having X-ray vision into the market's intentions.
It can be.
But of course, it's just one piece of the puzzle.
Absolutely. It's, most effective when you combine it with other technical and cyclical analysis techniques.
Right.
It's all about layering those different perspectives.
Right. It's all about putting the pieces together.
Yeah.
To get that complete picture.
Exactly.
Well, Clara, this has been an incredibly insightful conversation.
It has been.
Thank you so much for sharing your expertise with us.
It's been my pleasure. I always enjoy talking about the markets and sharing, what I've learned along the way.
And to our listeners, I want to leave you with this. As we head into the rest of the week, keep your eyes open, stay adaptable, and never stop learning. The market is always teaching us something new, and the more we learn, the better equipped we'll be to navigate those twists and turns. Until next time, happy trading.
Thank you for listening to the podcast ES Midweek Update. Subscribe to the Cycle Depth channel to stay tuned for the next episodes and leave a comment. We remind you that the opinions expressed in this podcast are generated autonomously by AI NotebookLM, based on our pre-market live sessions of the U.S. market, and therefore, the content might not fully reflect objective market data or the analyses from our live sessions. This podcast is not financial advice. A greeting from your host, Ryan Cooper, and we'll see you next Wednesday.